If you're struggling with bad credit, you're not alone. Millions of people, whether due to financial hardship, medical emergencies, or simply youthful financial mistakes, find themselves locked out of opportunities to rebuild. But here's the truth that most people don't realize: credit cards can be powerful tools to rebuild your credit when used the right way. This video is your complete guide to the best credit cards for bad credit, broken down step by step. We'll walk you through the different types of cards, what to avoid, how to use them responsibly, and specific recommendations that can help you start climbing the ladder to financial stability. This isn't just about getting approved, this is about building a foundation for long-term financial freedom. And that's exactly what Smart Dollar Mindset is here to help you achieve. So let's dive right in. Understanding bad credit, and why it matters. Before we talk about the best credit cards, we need to start with a foundational understanding of what bad credit actually means. Credit scores range from 300 to 850. Anything below 580 is typically considered poor. Between 580 and 669, you're in the fair range. Many lenders group both together and call it bad credit. Bad credit can affect your ability to rent an apartment, get a car loan with reasonable interest, qualify for a mortgage, get low insurance rates, even land a job in certain industries. So yes, bad credit matters. But the good news? It's not a life sentence. Your credit score is dynamic. It changes as your behavior changes. And credit cards, when used correctly, can be one of the fastest and most effective ways to rebuild your score. Real life example: Monica was a single mom in her 30s who went through a rough divorce that left her with $15,000 in debt and a 540 credit score. Instead of declaring bankruptcy, she started small, got a secured credit card, used it for groceries only, and paid it off every month. Within 18 months, her score rose to 680. Now she qualifies for low-interest auto loans and even got approved for a rewards credit card. Credit repair isn't magic. It's strategy and commitment. The role of credit cards in rebuilding your score: not all credit cards are created equal, especially when your score is in the 500s or low 600s. Here's how credit cards help your credit score. Payment history, 35%. Paying on time is the most important factor. Credit utilization, 30%. How much of your limit you use. Staying under 30% is ideal. Length of credit history, 15%. The longer your accounts stay open, the better. Credit mix, 10%. A combination of credit types helps. New credit, 10%. Opening new accounts can help, but too many inquiries at once can hurt. Credit cards help in 4 of these 5 categories. That's why choosing the right card, and using it wisely, is critical. But let's be clear, this only works if you use the card strategically. If you max it out or carry a large balance, it will backfire. Powerful transition. So if credit cards are the tools, what are the best tools for the job when you've got bad credit? Let's break it down, starting with a card that almost everyone can qualify for, with some skin in the game. Secured credit cards, the #1 way to start rebuilding. What they are: secured credit cards require a deposit, usually equal to your credit limit. So if you put down $200, that becomes your credit line. It's not prepaid. It works like a regular card. But if you don't pay, the lender keeps the deposit. Why they're great for bad credit: easy to get approved. Reports to all 3 major credit bureaus can graduate to unsecured cards with responsible use. Top picks for secured credit cards. 1. Discover It Secured Credit Card. No annual fee. Reports to all 3 credit bureaus. 2% cash back at gas stations and restaurants. Up to $1,000 per quarter. Automatically reviews your account after 7 months for graduation. Real life example: Carlos was denied for multiple unsecured cards. He finally got the Discover It Secured with a $300 deposit. He put 1 monthly bill on it, Netflix, and paid it off each month. Within a year, his credit score jumped 90 points, and he was upgraded to an unsecured version with a $1,500 limit and no deposit required. 2. Capital One Platinum Secured Credit Card. Initial deposit can be as low as $49 for a $200 credit line, depending on credit profile. Reports to all major bureaus. No annual fee. Why it's unique: you don't always need the full deposit amount. Capital One may offer a lower deposit depending on your credit background. Unsecured credit cards for bad credit: tread carefully, but know your options. While secured cards are generally the safest and most recommended option for rebuilding credit, some people may prefer unsecured cards due to the lack of a deposit requirement. The challenge is that most unsecured cards for bad credit come with high fees, high interest rates, or unfavorable terms. That said, a few stand out as relatively fair options. 1. Capital One Platinum Credit Card, unsecured, no annual fee, no rewards, but reports to all 3 credit bureaus potential for credit limit increase after 6 months of on-time payments. Why it's a solid option. This is one of the rare unsecured cards with no annual fee and no hidden maintenance fees. While it doesn't offer rewards, it's a reliable stepping stone if you don't have the cash for a secured deposit. 2. Mission Lane Visa Credit Card, no security deposit required, reports to all 3 bureaus, pre-qualification available with no hard credit pull, annual fee varies, $0 to $59. Mission Lane stands out for its transparency. There are no hidden fees and it offers an easy-to-use app to monitor your credit progress. If you're pre-qualified with a $0 annual fee offer, this can be a great tool for rebuilding. Retail credit cards, handle with caution. Retail credit cards, also called store cards, are often easier to qualify for even with bad credit. These include cards from places like Target, Kohl's, or Amazon. They typically have higher APRs and lower limits, but they can help build payment history. Why use them? Often easier approval process can be used to demonstrate consistent payment behavior. Reports to major bureaus. Warning: retail cards can be tempting for overspending. You walk into Target for toothpaste and walk out with $200 worth of just a few things. Only apply if you're confident in your ability to use them responsibly, and not treat them like free money. Credit Builder Cards, designed for your comebacks. Some companies offer credit cards specifically labeled as credit builder tools. These cards usually have very low limits and are geared toward individuals with no or poor credit. 1. Capital One No Annual Fee Visa Credit Card, no deposit required, reports to all 3 credit bureaus. Credit limits range from $300 to $5,000. No annual fee. What makes it unique? Capital uses cash flow underwriting, meaning it evaluates your banking habits, not just your credit score. This can be a game changer for people with thin or damaged credit files. 2. Chime Credit Builder Visa, no annual fee or interest, requires a Chime spending account and qualifying direct deposit. You move money into your credit builder account, and that becomes your spending limit. Why it works: Chime doesn't report credit utilization to the bureaus, which can help if you're prone to running up balances. It reports payment history, the most important factor in your credit score, and there's no risk of overspending beyond what you moved in. How to choose the right card for your situation? There is no one-size-fits-all card. The best card for you depends on your personal financial situation. Here's how to choose. 1. Know your credit score. Use tools like Credit Karma, Credit Sesame, or your bank's app to check your score for free. This helps you target the right cards and avoid unnecessary hard inquiries. 2. Determine whether you can afford a deposit. If yes, go for a secured card. It's safer, usually has fewer fees, and often comes with better graduation paths. 3. Consider pre-qualification options. Apply only to cards that offer pre-qualification with a soft pull. This protects your credit score from unnecessary dings. 4. Watch out for fees. Avoid cards with monthly maintenance fees, setup fees, and sky-high APRs unless there are no better options available. 5. Prioritize cards that report to all 3 bureaus. Some cards only report to 1 or 2 bureaus, which limits your score improvement. Make sure your card reports to Experian, TransUnion, and Equifax. Smart strategies to use credit cards to rebuild credit. Getting a credit card approved is just the first step. The real work begins with how you use it. To build credit effectively, follow these proven strategies. 1. Always pay on time. Set up autopay for at least the minimum amount due. Even one missed payment can significantly damage your score and stay on your credit report for up to 7 years. 2. Keep utilization low, below 30%. If your credit limit is $500, try not to spend more than $150 at any given time. This shows lenders you are responsible and not reliant on credit to survive. 3. Use the card every month. You don't have to spend a lot. Put a recurring expense like your Spotify subscription or gas bill on it. This builds history and keeps the account active. 4. Don't carry a balance if you can help it. While it's a myth that carrying a small balance improves your score, it's a very real fact that it leads to interest charges. Pay in full when possible. 5. Ask for a credit limit increase, strategically after 6 to 12 months of on-time payments. Many issuers let you request a credit limit increase. This improves your credit utilization rate and boosts your score, often without a hard inquiry. 6. Use multiple cards wisely. Eventually, once your score improves and you qualify for a second card, like a low-limit unsecured or student card, consider adding it to your wallet to diversify your credit mix. But only if you're ready. Common credit card traps to avoid bad credit often comes with predatory offers. These are cards that prey on desperation. Here's what to watch for and avoid. 1. Cards with setup fees and monthly maintenance charges. Some cards will approve you with bad credit, but charge $95 just to open the account, followed by $10 per month. That's $215 in the first year for a $300 limit. 2. Sky-high interest rates on retail cards. Store cards can have APRs over 28%. If you carry a balance, your interest charges may eclipse your purchases. 3. Hidden terms in subprime lenders. Cards like First Premier Bank, MasterCard often advertise approval with bad credit, but hide fees in fine print. Always read the full disclosure. 4. Multiple hard inquiries in a short time. Applying for too many cards at once signals risk to lenders. Space out your applications and focus only on cards with pre-qualification tools. Myths about rebuilding credit with cards. Let's debunk a few misconceptions that could hurt your progress. Myth 1. Carrying a balance improves your score. False. What improves your score is paying on time. Carrying a balance only causes interest charges. Myth 2. Closing unused cards helps your score. No. Closing cards reduces your available credit, increasing your utilization ratio. Keep old accounts open if they don't have fees. Myth 3. Secured cards don't help your scores. Secured cards report just like unsecured ones. As long as they report to all three bureaus, they are equally powerful. Myth 4. You need a perfect score to succeed. You don't need 800 plus. A score in the high 600s or low 700s can get you excellent rates and opportunities. Focus on steady improvement. Longer final thoughts. Rebuilding credit is a journey, not a sprint. Rebuilding your credit score when it's been damaged by life, circumstance, or past choices can feel like climbing a steep mountain barefoot. Every small win counts, but progress can feel slow. It's easy to get discouraged, especially when approvals don't come instantly, or when your score seems to move in tiny increments. But here's the thing, credit scores are not about perfection. They're about patterns. When lenders see that you've developed the habit of paying on time, using credit responsibly, and managing your money without relying on debt, your score naturally improves. Every swipe, every on-time payment, every balance kept under 30%, these are the building blocks of your financial comeback story. Credit cards are just tools. They don't fix anything by themselves. But in the hands of someone with a vision for a better future, they become levers of transformation. Whether you're using a secured card to get back on track or climbing into the fair credit range with a mission-driven card like Petal or Chime, the point isn't the card, it's the mindset. And that's what Smart Dollar Mindset is all about, empowering you to take back control of your finances through smart habits, smart strategies, and yes, even smart credit card choices. Wherever you are in your journey, know this, it's not where you start. It's where you finish. Stick with it. Stay consistent. Make smart money moves every day. And the financial freedom you're working toward will absolutely be worth it. Subscribe to Smart Dollar Mindset if you found this guide helpful. Make sure to like, subscribe, and hit that bell icon so you never miss an episode from Smart. This channel is dedicated to helping you build financial freedom from the ground up, through smart money habits, investing, and everyday strategies that work. Tell us in the comments, which card are you thinking of applying for? Or do you have a credit comeback story you'd like to share? We'd love to hear from you. Thanks for watching, and remember, your money should work for you, not the other way around.